Point, and today I have Eric Gray here with Fairwood out of Snoqualmie, and he is going to give us a little update forbearance. And with things constantly changing, people having loss of income, maybe having to file unemployment, this is a very difficult topic to touch on because some of you may have to use it. Eric is going to hit some main bullet points on how this works, your options, and all the good details, because there are some false information out here on this topic.
Yeah, so thanks, Jenny, for kind of leading the way here. It's a platform and an opportunity to kind of just help our peeps, if you will, right? And kind of how I'll cover this is I'll just go from a higher level of what I'm seeing, but then I can also give you the mechanics, and I don't know if you're more than free to share that waterfall.
Yeah.
Diagram, I guess, for lack of a better term. But here's kind of what I will tell you. The forbearance through the CARES Act is a is a fantastic thing. I mean, obviously people are being impacted. 17 million have filed for unemployment in the last 3 weeks. That's probably going to go up by another 6 million tomorrow. It'll get posted. And people's lives are being hurt. So I'll just throw out a quick stat here just to give everybody an idea of what we're dealing with right now. So we just last week, first time unemployment claims hit 6 million. I want to say it was 6.6 million. The peak weekly first time unemployment claims for the 2008-2009 crisis was 600,000. So that kind of just gives you an idea of the depth of impact in people's lives kind of being turned upside down. So this forbearance thing is a huge tailwind, if you will. But what I want to touch on is making sure everybody understands the mechanics, because you and I, Jenny, we see a lot of misinformation out there. And the first thing I just want to underscore is just through kind of a little motto, right? Forbearance is not forgiveness.
Yeah.
So it is, your payment doesn't go away and you're not going to have to repayment. At some time, once you get back on your feet and or once the forbearance process comes to the end, the window, that deferred payment is due. It is unequivocally due. And so we just need to make sure that everybody understands that going into this, right? The other thing, Jenny, you touched on is it is 100% incredibly difficult to get a hold of your servicer to set this up. I literally am telling everybody, be prepared for having to call back multiple times. Make sure your battery's charged on your phone, put in your earbuds, call the number, go on hold, and go do the dishes, go do the laundry, and just have it sit there in the background and be prepared to wait for several hours, right? Yeah. Before you get a hold of somebody. They're doing their best. They're just overwhelmed, And so everybody just has to preach patience right now, and eventually you'll get through. The next thing I'm telling everybody, like past clients, new clients, and anybody that's kind of filtering in, is make sure you get everything in writing. You have to get everything in writing. And so as you connect and you talk to the customer service rep at either the bank, the servicer, et cetera, write everything down. And then that kind of circles up. I've started to see now, I've had clients, right, start giving me the letters that they're getting from their servicer, kind of stating the terms of the forbearance. And they're not all unicorns and rainbows, I will tell you that. It's some pretty strict language. And essentially, the takeaway I'm getting is the position the banks are taking, the servicers are taking, is they're affording everybody 3 months, even though the CARES Act says the initial forbearance period is up to 6 months and a possible another 6 months. The letters that are coming through is saying, hey, we'll give you forbearance for 3 months, and then we'll circle back and we'll see where your financial position is, seeing if you're back to full employment, seeing if you've stabilized. Also in that, they include very clearly that once the forbearance period is over, whether that be 3 months or 6 months, the full deferred amount is due once you start back up on your normal payment schedule. So just do the math. I mean, if you're at a $2,000 payment for round numbers and you go, 6 months, you're up to $12,000, right? And so you're expected not only on that 7th month to make your $2,000 mortgage payment to restart up the loan payment process, but also to come up with the $12,000. And so that's kind of scary, right? and probably a bit challenging if someone did ask for forbearance, obviously, because their income was cut in half or significantly reduced due to unemployment. So just know that, like I said, the language has been very strong, scary, but just know you'll have options. And so while the letter doesn't give you all the other repayment options, you have to unpack that at the end of the window. And so that's where I want to transition now and kind of talk about the diagram that I gave to Jen. She'll share about the other options so you know that there's light at the end of the tunnel. And I would be very surprised at the amount of people that will be able to pay back the full amount once they come back off the forbearance window. And so these other options become much more important so you can understand to go forward. And so assuming you can't make that full deferred payment in the 7th month, let's say, the next thing it would fall down to is a repayment plan over 12 months. And so you'd essentially months. And so you'd essentially just take that $12,000 that was deferred and divide it by 12 and then add it to your existing mortgage payment. So if it was $2,000 and it was $12,000 owed, now you would be paying $3,000 per month, to not only pay your current mortgage, but also pay back what was the deferred amount. Well, let's say though you go back and your hours went from 40 hours a week down to 30 hours just because we haven't recovered, because you're in an industry where you're not back to full activity and whatnot. Then it turns into taking the deferred amount, $12,000, let's say, and tacking that on to the end of the loan, basically as a second lien. And it depends on second lien. And it depends on if you're conventional, it depends on if you're FHA, right? How that's all structured. But the takeaway is that $12,000 would be sitting on the end of the loan, right? So 7th month, you would start up, you're paying your $2,000. That $12,000 goes to the end of the loan. And you've essentially extended your loan term. Now, should you sell, let's say within 3 years, obviously you would have that $12,000 sitting there and you'd have to pay that back as part of the proceeds from the sale, okay? The last option is we come out of the forbearance window, we're in the 7th month. Well, let's say you're still unemployed, right? And so you extended it another 6 months. So you're up to 1 year forbearing all of your mortgage payments. And you come off of that year, and let's say your job never came back, or let's say it came back in half the capacity, or your income's been cut in half. And now, not only do you have to pay back what was deferred, $24,000, but you can't afford, your $2,000 payment. At that point, you start talking loan modification, right? So, to be honest, lenders want to keep you in the house. They don't want to be in the foreclosure business and taking on property and trying to, divest property through the market. It's not good for the market. It's not good for house values. They're not designed to do that. They're going to look at a loan modification. Well, how much can you pay so we can adjust what are the loan terms so you can still repay the loan and stay in your house. And so, like I said, you've got, 4 different waterfall options there, depending on your capacity when you come out of what is the forbearance window and how you get that paid back. And so I just think that's really important to share. I haven't seen a lot of detail just kind of out on the general web or general information that breaks that down. Hopefully, like I said, you guys will see this visual here of your different options and how they are structured to give you guidance. But what I would say is, if you have the forbearance for 6 months, and let's say you're back to full-time employment, after 2 months, start making your payment. Like, do not wait, just because you have a 6-month window, and what I would say is, if you did kick in the forbearance and let's say your income took a quarter hit, make some form of payment. So try to minimize the amount that is deferred that you have to pay back when that window closes down. So there's nothing to say that you can't make a payment, right? And so just keep that in the back of your mind, because ultimately you got to pay it, like we said. So if you can just chip away at it and minimize it, you're basically, pulling forward kind of what is the pain potentially, at the end of this. So it's pretty incredible times right now. So
Definitely. And that was a couple questions that came to my mind while you were explaining all of this was, if you do go on forbearance on your mortgage, is it okay to still try to make a little bit of a payment to where when you're at that window comes where all of them are due with whatever option you get to repay, is that okay? Does that not like take away your forbearance to be making a small payment on your mortgage if you can?
Yeah, I mean, it reduces it. For example, if it was the $2,000 example we were using
Yeah.
and able to make 1,000, you know, instead of it being 12,000 at the end of the forbearance window, now you're down to 6,000. So much more doable, much more attainable, right?
Another question I've heard people say that there is a part in the CARES Act where the only option our lenders should be giving us in a forbearance is putting it on the end.
No, it's up to the servicer. So the CARES Act does not mandate how the forbearance works mechanically, right? And this waterfall decision, loss mitigation diagram is directly from our loss mitigation department. So we have a small servicing portfolio, and this is exactly how we would handle someone that went into forbearance and industry standard. And that's further supported by those letters that, like I said, I'm seeing forwarded by borrowers and stuff. And not that the banks are playing hardball, right? But they don't want to delay and kick out, what are deferred payments. Because if you think about it, we've given relief to what is the homeowner, which is the absolute right thing to do, but someone's got to pay for that amount, for that money that's not coming in. And so in theory, the servicers and or the banks are getting squeezed, right? When those payments aren't coming in. So they've got to make up that difference. And so naturally, they're going to position themselves to recoup that in the quickest amount of time. And that's where they're going to say, hey, we need the full deferred amount when the forbearance period is over, due with your first payment. And then at that point, that's when you open up the dialogue. Yep, that's not going to happen. That's too much. What are my other options? And you'll probably have to kind of pull it out of them a little bit.
Yeah, you got to play a little bit of hardball with them, it sounds like, to let them know that, hey, that option isn't going to work, and I want to still keep my home and pay you, the rest of the mortgage on it. So let's have a solution. And then they trickle you down to the next option.
Exactly. And I think that's the spirit, right? Like everybody wants everyone to stay in their home. You know what I mean? So just remember that. So if you feel like you're hitting a wall, or if they're being difficult, just practice patience. They do not want to foreclose, right? They go through that process and take you out of your property and take on that REO. It may be a little bit, but just know that.
So it doesn't specify
right
in the CARES Act what it is, and to the point, like it leaves it a little open-ended to be.
Absolutely. Yeah. And that's where I advocate, like, you got to call your servicer and you have to ask them, and you also got to get it in writing.
Yeah.
I guarantee you, if we did an experiment and called 5 different lenders, we'd probably get 5 shades of gray, and they probably would all be really close, but I'm sure there's going to be discrepancies, differences. And so you almost got to be lawyer-esque, and just make sure you dot your I's, cross your T's, and document stuff. Man, you just got to bear and grin it kind of thing, and just be patient, keep a positive mindset, right? And know we'll get back to normal here eventually, and you're going to be in your house, so.
Yeah. And Washington State, I niche pre-foreclosures to try to list them to help those people not have foreclosure go on their credit and everything. And
nice. Yeah.
Washington State's already one of the highest foreclosure states there is, along with Florida and a couple other ones that go against the rest of the United States norms as far as numbers with foreclosures. The other day I was reading only 0.06 of all foreclosures actually go pre-foreclosure, which means they get it sold prior to auction.
Right.
And so with all these forbearances and people maybe getting frustrated and giving up on trying to speak with their lender and just say, no, I'm not going to pay, or I'll pay maybe half, or basically take their own mortgage into their own hands and pay how they feel because they're frustrated because they can't get through. And it's like, no, you don't want to do that, because you will set yourself up to get in a sticky situation where you may get foreclosed on and be one of those numbers.
Absolutely. I mean, it's easy to get caught up in the now, right? And lose sight of unintended consequences down the road, whether that be 6 months or like 2 years.
Yeah.
That brings up a good point. And hey, forbearance sounds like a great idea, right? Like, even for our people that can still make their payment, there is no means testing in terms of who is granted forbearance. All you basically have to do is call up and say, I've been impacted by COVID-19, right? And they'll start the process and they'll grant it. Much of people that are truly challenged and need this help in this support, I've had just as many calls from the savvy people going, hey, why wouldn't I do forbearance, right? And stockpile my cash, right? Till we see that everything settles down, till we understand that we're on stable and firm footing. And the one thing that we didn't talk about was like the ramifications and the long-term impact on what is your FICO or your credit score, your credit history specifically.
Yeah.
The CARES Act, it specifically states that this will not be, reported as a derogatory event, a late payment, et cetera, which is fine and which won't impact your FICO score. And so if you're in forbearance and you have a 750 right now and you come out of it, you'll still have a 750. But the problem is what happens when you go to refinance 8 months from then, because rates actually drop to where they should be, because right now rates should be mid twos, like relative to the 10-year and stuff. But they want to refinance and take advantage of that. And the lender goes and pulls the credit report. And one of the big things that we look at is 12-month payment history, right? Looking for lates on your current mortgage. I mean, that's one of the best indicators, like ability to repay. And so while you're not going to have a late payment derogatory event because of the forbearance, you're going to have a gap of no payments. Well, everybody's going to look at that and know exactly what that is, right? And so then what happens? How are lenders going to interpret that? Are they going to say, hey, it's okay? Are they going to go back and look at your employment history, right? Because technically all we need is 2 years. There's all these unknowns right now. And so I guess the message is for those clients, if you don't need it, or like we were talking about, make the payment if you can. You don't know what the other unintended consequences are down the road with what is a great thing. Don't get me wrong. It's a good thing, but you just don't know, because ultimately lenders are trying to assess risk and the ability to repay. And one of the big things is your payment history on your mortgage, on your current mortgage.
I wanted to also ask you, is there a lot of people right now who, instead of maybe doing a forbearance, they're taking the initiative to try to do like a HELOC and pull money against their home that way, and then to kind of float maybe their next 3 months of bills with a HELOC? Like, are you seeing a lot of people take that strategy?
It's funny. My short answer is no, right? But you are spot on in terms of being very observant in that we have the greatest amount of equity that we've had. Trillions of dollars of homeowners sitting on what is equity, right? And the question is how do you self-insure, basically, right? Like, forbearance is for the people that are pinched, right, and concerned. And maybe it's that bucket that I was describing that's the more complex, saying, hey, maybe I do forbearance even though I can make my payment to reserve my cash.
Yeah.
This is where I'm steering them, going, if you're concerned and you want to raise cash, right, you can either do it through a line of credit or a cash out refinance, right? And then that expands the topic of not only do we check off that box, right, of creating some liquidity for yourself so it's not all tied up in the equity of your house, but let's look at your global debt structure. Where are you at with your cars, student loans, consumer debt, et cetera, because it all comes back to a cash flow perspective. So yeah, it's great. Let's go take out a line of credit. And so you have that available, but let's not stop there. Let's go deeper and go, Well, you have this car payment, that you still have 7 years left on, or you have student loans that still have 10 years, and if we took out a cash out refinance at today's low rates, like low borrowing costs, right, and paid off some of that consumer debt, yeah, maybe you only saved a quarter rate on your interest rate, which is not sexy, because everybody's fixated on rate.
Yeah.
Here's the reality. I just increased your cash flow by $1,200 per month.
Yeah.
Or whatever, $24,000.
Payments are gone, and maybe you can insure the car less now because you don't need full coverage, and that
Exactly.
That's huge. That's huge.
Yeah. And so that's where I'm trying to steer everybody into, like, just thinking about that, right? But not a lot of people, I think everybody's still shell-shocked a little bit.
Yeah.
Still worried, So it's just a matter of education.
Awesome. So glad to have you here today with me, and that we got to give people some more knowledge, some good, useful knowledge to help everyone during these changing times. I'm sure maybe something will be changed next week. So there's always good topics to bring up and discuss to everyone to keep everyone informed on how to kind of wade through what we're experiencing right now.